we go.
We are going live, y'all.
Hey, party people, 2 minutes to showtime.
Are we there? I think we are live on Facebook.
No, we're live right now.
We're live.
Yes, we are officially live, y'all.
I'm waiting for you to share, Mark.
Like as usual.
I don't know why does it pop up for me? Oh wait, here it goes.
See, look at that. Look at
First time ever.
wow. There she go.
Who came up?
Yeah, I would really like to know who had to come up.
Okay.
This is one of the reasons why I hate typing on an iPad screen.
Why?
You know, I do have long hands, but it's just like, but you know, keyboard. Let's go.
Finally, Steve showing some love. No, I'm just kidding.
I know. He's like right.
Just now liking it. Just now liking it.
I've been making.
I guess I should turn off the heat since we're about to have like all these lights on.
It's LED. You'll be fine.
You got me over here lit up like Christmas.
All right.
All right, man. People are loading in. Go ahead and shout us out from where you at. Hopefully we have our usual, so that way I can do my little piece. I'm gonna be hurt if I don't see it, but you know, hey. What's good, everybody?
Hey, Shavonchi. We got Deborah White, Roberson, Miriam coming from Canada. Hey, girl. Hey, Bonita Bunny. Or I'll just call you Bunny. Hey.
Matt Reese is in the building.
What's up, y'all?
Hey. Let's give a shout out. I wish I had a bell.
He over here watching himself.
No, I don't know what y'all are doing. I'm like, how do I know who's commenting, man?
Ladies and gentlemen, we got Kamari Bright in the building.
Hey. Killer Cam.
Yes, I'll definitely shout you out when I see you in the chat.
Bunny. Hey, girl. Ranny in the building.
Fresh from the come up.
Ranny, you better talk your shit. I saw what you wrote today.
Oh, we got Kent in the building. That's what I'm talking about.
All right, where else is everyone coming from? I know that
somebody said I'm fresh from my couch. We got a studio set going on over here.
Hey.
Ruble in the building from all the way across the street. That's what I'm talking about.
Okay, Ruble.
Neighbors in the building. Steve won another shout out, so he's back.
Hey, thanks, Kamari. Look at Randy. It's so great to see y'all.
Yo.
He said next week from Mark's couch. You'll have to fight Butter for that one.
And then, I mean, Butter got his whole little yellow thing going on right down here. So
okay.
He's just chill right now.
I got the multiple devices.
We got 2 more minutes before we get going, so go ahead and fill it in. For sure, like the video or like the live stream. Hopefully it'll be, you know, if it's not good, then you can unlike it. But you know, we typically
I will fight you if you unlock
it. We try to give you guys an hour of power. So hopefully we always make sure that we stick to what we say that we're going to do, and then make sure we give you guys value, so that way when this video is over, you say, hey, I learned something. And that's the crucial part. But feel free to comment. We definitely want to read your comments because we learn a lot from you guys, and we try to give you guys as much information also in the comments. We know that you guys are lit there. And then on top of that, feel free to definitely share it with your network, because just keep all this information to yourself. I mean, it's a together thing. It's an us thing. So we're all in this together. So go ahead and get this information and knowledge out to somebody else that you may know. We got Bria in the building.
Hey, Bria. need y'all to share right now, though. Share right now. Right now.
Go ahead and share that video.
Right now.
Let's go ahead and share.
Ready?
We got Shell Roberts in the building. Uh-oh.
Hey.
Coming all the way from the View. What's up, Bria? You probably see Butter like walking around in the background. You good? Okay, he's just like, I'm just moving to a different spot.
She said 2 weeks
2 weeks in a row.
Erica, hey girl.
Oh, wifey in the building, so you know I gotta be up on my P's and Q's.
Right.
Yo, man, I gotta get the permission slip. Is it all good? All right, so it is officially 5:04. So I'm gonna pass it on to the wonderful Miss Sheldon GC.
Hey y'all, what's up? This is wow. What day is it? June 9th on a Tuesday.
Let's go.
Tuesday.
147 days left.
Yeah, 147 let the countdown begin.
Yes.
All right, so we have a couple of things for you all today. As you know, on Trade Talk Tuesday, we like to talk about trades, what you can make, trades that you can make tomorrow morning. Okay, and if you slept on last week, you were really asleep because we'll have to just review those charts. So pull those charts up, Mark. But let me just give you, what was that?
Should I pull them and prepare them while you're getting over there?
Yeah, get them ready, get them loaded, get them locked and loaded. All right, so we got the Dow today down about a point, a little over a point. S&P 500 was down less than a point, and NASDAQ reached a high today, hit the 10,000 for the very first time, and then just came back down just a little bit. But overall, it was up 0.37%. So that is good. We'll see like how it continues to go. As far as what was happening in the sectors overall, tech was up, communication services and consumer discretionary. Those are your top three performing tech sectors. And then the bottom performing sectors that had like the lowest percentage change, industrials, health, and energy. So now that you all know pretty much what happened in the market today, it was a good day for me. I don't know about y'all, but I came up. I hope y'all came up. That's what it was all about. But we have a special guest. This is OG homie, Mr. Matt Reese. He is a business owner, an investor, a husband, a father of 4.
Oh man.
He is head of merch at the Come Up series, as well as absolutely hilarious. Let's give it up for
what
our
up,
friend Matt Reese.
What up?
All right.
Too much.
Matt, this is your first time on the show. Welcome.
Nice to have you aboard.
Why, thank you.
So, let's just get right into it. It's Trade Talk Tuesday. So, man, talk to us about your investor journey. Like, when did you start? How did you start? Like, what was going on?
So, my investor journey is very recent in terms of stocks. I've been investing in real estate since 2001. Bought my first property in Los Angeles and then turned that into a few different properties across the country, Madison, Wisconsin, LA. And 2008 hit me hard. And once I was kind of getting resettled back in Seattle, I've slowly begun to put my time into, starting business with my wife, getting into the markets. So actually trading with the help of some good friends of mine that got me started in 2018. And since then, I've been back in pretty much all sectors of real estate. It's taken me some time, but Tiffany and I have kind of gotten diversified with our portfolio.
Awesome. All right, so you said you're new to stocks.
I say you got spirits in the background.
I know. Wait, no. My camera's above kid height. I got little kids, so they peeked the door open. They knew what was up, so they had to slide back out.
All right.
Oh yeah, go ahead.
All right, so you just said that you were new to stocks, so let's talk about let's take inside your portfolio. What's looking good for you? What are you working with?
So my portfolio is very slim. So I appreciate you inviting me over here because I only have one actual trade, but this one trade has basically come from probably 2.5 years of really learning what I'm comfortable with. And so when I think of trading, I think of what my risk tolerance is and my wife's risk tolerance, since we were investing together, she may not be on the thing, but she gives me an okay to spend everything. So I can't do nothing too risky. I can't do nothing that might be outside of our, let's say, moral compass. So I'm looking over my shoulder like, don't pop up on me right now while I'm talking. But I have a very small portfolio in terms of just one trade, but I had gotten up to probably 5 or 6 different options trades that I was doing at one time.
Mm.
August of 2018, when the market took a huge hit, we got hit pretty hard, and it didn't deter us from investing, but it made us think differently, because as we're business owners, I don't have the time to invest into watching the market like I should. And so I think as I get more experience and I'm able to put more time into it, I can get a little bit more trades in the market. But right now I do a leverage trade where I'm in the end of the year, allow the market to move, and I'm not having to watch it every single day. I know I have a year and a half out for my my strike price, and I'm able to kind of meet my hurdles. So I have some goals I want to hit in terms of appreciation, and when I hit them, I will either roll or sell out or hold tight.
All right, so I remember we were talking about performance, and
Yes.
already I'm gonna say post-COVID, just because we're in recovery, even though I am aware that COVID is still out there,
Yep.
as you all are as well. But as we are looking at, we're in kind of like this new phase of reopening. We were talking about performance, and the performance you had was like, whoa. So what was that performance number? And then also like how were you feeling about that?
Well, I mean, I'm feeling great because I need to recover from 2018. But no, I was at over 1,000%, which is, remarkable for, the amount. I started off pretty standard, with the Roth IRA that we're trading out of. So you get 6,000 a year. That's written off. So our business is able to contribute to both of our IRAs. And then, just letting it sit. And I've now made 3 trades this year. So, first one hits my strike price, I roll it into another one, strike price, roll another one. So for me, it's just, once I see the appreciation that I was looking for based off of my research, then I'm fine rolling it into the next one. So for me, it's more of a long-term hold until I have the time to, sit in front of 3-4 screens in my office and really get busy like you guys do. But I would say I'm new to the game.
Okay.
Yeah.
Okay. Well, I like your approach. Especially like giving just the context, like you are, you wear hella hats, and not just the North Face one you got on right now, right?
Yes.
And being able to like quote unquote set it and forget it and stick to your plan and stay the course has definitely worked out for you.
Yeah, and I think that's the major thing is like after learning from you guys, I've read some books. Blue Ocean Strategies is one that I read that contributed to how I looked at some of the businesses that I want to invest in. And it's just, you got to get in. And if you wait, a day, a month, a year, you're losing opportunities for your money to work for you. And now as a business owner and knowing, having employees, even myself, when I stop working, I don't make money. And so if my money stops working, same thing, same concepts apply. So just wanting to make sure that I'm in the game with, if it's just a toe, foot, and then as I can get, more confident with my research and can do bigger trades, then I'm eager to get back in. But for me, you got to be in. So.
Yeah. What I appreciate about you sharing is it's very relatable, like starting out with whatever you have and like building it up, and use the keyword leverage. So I'm sure folks in the audience appreciate that perspective. So I'm going to kick it to you, Mark. Unless you have a question for Matt, or you want to get right into it.
I'm probably, man.
I got my pen ready too for these trades.
Hey, I'm pretty much willing to wield the sword. I know that you guys want me to get back to last week's review, so
yes, let's take a review.
All right, so let's talk review. So last week I mentioned 5 stocks back on Tuesday, and those are the companies that I said, hey, if you're looking to deploy capital immediately, you will see a beautiful return on those. I think I kind of gave it the guarantee that ultimately that they would perform. And so I guess let's get into it. So one of the main companies that I talked about was, I think it was Boeing. And I had,
Oh yeah, we talked about that. Yes, we did. Yes, we did.
we did talk about it.
I wasn't just talking about, I had to be about it. Okay.
So yeah, so you know, some of us, we got into that trade. And so if you got into the trade, so for example, if you had bought the stock at the same time that I told you to have bought it, which means that the very next day you were in the market, and if you would have held to, say, for example, till technically today, then you would be up by, I think the number is 60% return on your investment. So a week's worth of, you know, hey, let me just go ahead and just do it. Let me just put it into action. That would have been a 60% return on your money. So let's go ahead, since everybody wants to come at me up from Spirit Airlines for the charts, you know, let's get into it. Let's just go ahead and get into it. So I guess apparently I have to allow Zoom to see my screen. So give me one quick second.
All right.
Oh, wow. It's not allowing me to. So that's weird. So this is what I'm going to do. I'm going to hand it over to you, Jolene, and I'll get right back into the chat because Zoom is acting crazy today. I am going to go to you, and I'm going to make you the admin for a quick second.
All right.
And I will be right back.
All right.
Give me one quick second.
Let me see if the share screen works.
Yeah, they had this thing where they make you quit the app.
Oh, got ya. All right. Well, in the meantime, before we get into the charts, y'all, Linda's already saying charts. All right. So I'm gonna just talk to you all about what happened with Boeing. So when last Tuesday, when Mark did his top, I think it was like 5 stocks or so, he did his top 5 stocks, and Boeing was one of them, and it was at 147.
Ooh.
Okay, 147. Then by the time it was Wednesday morning, it was up at about 179, and then it went as high as like 180. Then fast forward, by the end of the week, I think it was at like 230 or something. It was close to 200, but that's what he's talking about. So for people that would have just got in right away, man, even if you got in at 180, I mean, you still looking pretty. And one of our friends, Tasha, got in at like 97, and we were talking about, you know, oh, did you get the stock? Did you get the option? So people were, you know, on it, but she had it a while ago though. So she bought it and then held. But what I'm going to ask you, Matt, what are your thoughts on Boeing?
So, which is interesting, when we talked about that, I used to work for Boeing. And so my first stocks were 30 shares of Boeing that I had received when I hit my 5-year mark back in 2006. And I traded those stocks back in 2018 when they were at their high of 390. I think they had gotten like 395, 400. So for me, Boeing was always somebody that, with the stimulus money that they received, they can't go anywhere. So knowing that they will be around, knowing that airlines will pick back up, that it would have been a good options trade for, you know, a year and a half. So my leverage pick, it would have been a good one. I didn't have the liquidity to make that trade, so I would have been in there with you guys. What I would love to know is, what was the return on the option? So he said 60% on the stock, but if you did an options trade, do you have any charts, or is he going to be able to show the difference? Yeah. Okay. Because
I can tell you what mine was.
Oh, okay.
I was up 118.
See, okay.
18%.
So 118%, you were up on that trade in a week.
Less than a week.
Less than a week, okay.
Yep,
yeah.
Less than a week.
But I think so when we talked about it, all of the fundamentals were there. And I think with what we're seeing in the market, fundamentals didn't change. I think people's risk tolerance did. And so you saw money leave the market, which, you know, I think caused a lot of the decline. But when companies are getting the stimulus check, they, you know, might have laid off people, may not have, but they should have weathered the storm. So then if they were 390, you know, 2 years ago, and you're looking at them at 170, I think that is a good indication that there might be some value there.
Yeah, totally. I mean, not to mention we're reopening. Boeing has several contracts that they're, still looking to fulfill. And when you look at the market, hold on, let me send this invite. When you look at the market, you see, money moving from out of tech over to industrials because tech is really expensive right now. So as it continues to trade over its opportunity, after obviously with COVID, it took a huge hit. And now it's like it's getting back up there. So
did you both make your trades on a leverage play, or were they short term?
I did my trade as a leverage. It doesn't expire until
so
January 2022, but at the same time I'm going to I probably won't stay that long. My strike is at, what strike did I get? I think I got
400 was, I thought was, okay.
Yeah. So I've already made over 100% back already. So I'm going to be holding it. I'm definitely going to see how it does through the end of this year. And then also.
Now remember our discussion about the percentage.
Yeah, but that doesn't apply.
Okay.
Until closer to the time.
All right. Okay.
Yeah. Now, so let me just fill you all in. So Matt and I were kicking ourselves back in
end of March.
Yep. Yes, March is back. End of March. And we were kicking ourselves because we didn't shave off and then the market tanked. Shave off meaning sell some of the shares that we had. So welcome back.
Man, Zoom is on some other stuff.
All right. So let's get the charts now for Boeing.
You ready for the charts?
Yes.
Oh, I need host access. Please give me some access, please.
Give them the access.
Lord have mercy.
I want to be in the Cool Kids Club.
All right, can you share now?
There we go. Let's do it. All right, so
nice.
We are officially at the charts, which everybody loves. All right, so did you guys already do Boeing Company, or did you guys leave it there for me?
A little bit.
Yeah.
Okay, so all right, so pretty much here's where we started, y'all, where it's like I saw pretty much a little bit of movement going through on the 3rd. Well, we had our come up session on the 4th, or pretty much that on the I think it was on the 3rd. And so pretty much the 4th was the very next day where we started to see it climb, and then it literally just blasted off into space. And this is what I mean by the equivalent. We're kind of tapering off a little bit, but we're still going on an uptick higher. So I think when it's all said and done, we're probably going to be seeing Boeing kind of like, I said that we would meet a little bit of resistance around the 220, 230 range. And so we met that resistance, came back down, settled off for a second. And then I think the stock is going to be marching higher as the year goes into the end. So if you guys did that, then you guys will be literally up 60%. If we look at it, say, for example, within a 3-month chart, it shows us that we're coming down a little bit. We just lost a little bit of steam over these past few days, but have no fear. When you look at it over a year-long span, I mean, we're pretty much halfway there. So, of course, it's about time that we probably correct on Boeing stock. Now, another thing that I did was on Qualcomm. And I think I was talking about Qualcomm because if you look at, again, Qualcomm, they had a major boom after I had did the announcement of the stock. And again, that stock is also tapering off. That stock, I think, if you had got into that investment, that is the equivalent of about, I think, 45% return. I think another stock that I did, and you're going to have to help me there, Jolene.
Oh, yeah, sure. You did ARC, you did...
ARC, yep.
So let's do ARC. So ARC, same rules apply, except it's had a little bit of a tumultuous week due to the fact that we're pretty much at break-even levels here. And I think the interesting thing that we're seeing about ARK is, if we're looking at it, it's the fundamentals are still in place for this position. I think that we just happened to stumble across where, like I said, I saw it as an opportunity, given that it's an ETF. It's something that if you want to have Tesla ownership as well as into any new innovative companies, then this would be the place to be. This would probably be a little bit more of a longer term position. So you would probably want to stay in this position for about a month to 2 months at minimum, given that it's an ETF, so it moves a little bit slower. But I think that we're looking at this stock, but probably if you're staying in it for about a year, you're probably going to be looking at this stock trading at about close to $80 a share, given that you have Tesla, Illumia, Roku, which I'll get into later on today, as well as some other solid companies that are just killing the game. But I mean, we all know that the reason why you go to ARK is for Tesla.
You had also mentioned Uber.
I did. So here is Uber. So had you invested into Uber, you would have had that beautiful spike later, or like pretty much midweek, and then the stock kind of tapered off. But when you look at where, again, the stock is going, it has this beautiful march going up. And mind you, this is, if we look at it over the 6 month span, this stock is still recovering. And that's what I like. That's the reason why I chose a lot of companies, and I'm choosing great companies, given the sense of how they are functioning as a company, not just because of the stock. But one of the things that I'm seeing is that this stock is marching back up to where it once was, which was around the $40 price range. And I think that if it can get past that, it'll probably blow past that range and probably go to 45, roughly 47. That's over a 6 to 9 month trajectory of getting to the $40, and then from the $40 probably another 10 months to get to its new 52-week high.
Okay, let's see. You also talked about Hero.
Yes. So Hero is, again, another ETF where I like what they're doing. If you looked at it over the past week, where it started off at about $21 and now it's sitting at about 21, still even. It's a pretty steady Eddie position, but the reason why I say that is because we're pretty much at 21 now, and we're preparing to go the next leg up. So again, this is a stock that, or ETF that you're going to hold going into the end of the year, because of the fact that, and as you can see, there's not a lot of news on this ETF because, like I said, it's pretty much brand new. I mean, it's only been in existence since October of 2019. So there's a lot of run room for this position. But what I see moving forward is that given that you have PS5 as well as Xbox release coming during the holiday, this is definitely going to be a position where you're going to want to have that exposure, if not, like I said, something safe and something that's slow growing.
That's right up your alley, Matt.
Look, wait, I'm taking notes. I'm already like, okay. I like that. I like that. Steady Eddie.
Yeah. Another one that you mentioned, let's see, Hero, you did ARK, Qualcomm, Boeing. Did you talk? I circled it. Oh wait, yeah, SMH.
But of course.
That's the motherfucking H.
Oh my gosh. Yeah, you have this love-hate relationship with SMH, but here's the reason why I love SMH, which is known as not shaking my head, but the semiconductor market. This could get very, very interesting given the sense that we just heard some news from Apple, hint, hint, earlier today about what's coming down the pipeline on June 22nd when Apple has its developers conference. Apple is in the process of making its own chip to supply for iMac as well as this MacBook lineup. That is huge because that literally takes out a company by the name of Intel, which happens to be one of the top chip makers, especially for PC or just personal computing devices. So that would take a huge chunk away from Intel, which provide a lot of opportunity for its little stepbrother, also known as AMD. But no, I ain't the one to gossip, so you ain't. But what I can say is, had you, say, for example, dropped your money into SMH, you would have had that beautiful bump going up, where it hit its nice little 52-week high, and now it's kind of like settling off. But I love this because we still have some steady growth. If you look at where we were at 150 and we're still at 152 when it's all said and done, I like that. I like it in the sense that it didn't come all the way down to the 148 and retreat. What it did was the lowest that it hit was at 150 even, or 150.33, but 150. And I like that because of the fact that that's showing you that there's a lot of support there. So which means that this stock will probably be marching a lot higher.
Is that going to be next week? I mean,
actually, you know what?
Love hate.
I'm actually going to do a rarity here. I'm going to stake it and say that yes, you will see SMH go higher. Pending, of course, always pending. Given that any tomfoolery takes place, say for example with any company, or say for example if the market gets spooked by, say for example, COVID-19. I think the market doesn't really care about what the president or what's going on at the White House anymore. I think it's kind of becoming immune there. But one big risk issue also that could potentially tank it is US-China. So if we hear anything that comes out of China that derails that strategy, then you could see chip stocks taking a lower leg. But I don't see that happening.
I'm just trying to figure out if I should get out now.
So do you want to tell people about like this
love hate? This love hate?
Yeah, okay, y'all. Okay.
I feel like this is like a love and hip hop kind of situation between SMH.
Man, me and SMH, man. Well, first of all, SMH definitely last year contributed a lot to the performance of my portfolio. And so SMH is like one of those ETFs that I'm just like, oh man, SMH, because when they move, but when they drop, they drop. So you just gotta be, it's almost like an abusive relationship. You gotta know what you're getting yourself into, and it's like, oh, I'm done with you, and it's just like, oh, I'm coming back. So right now, we're getting towards the end of our relationship as my contract.
Funny though, I have a feeling that your relationship can go to a whole nother level. You want to see why?
Yeah, I want to see why.
Look at that.
Okay, I can see that.
That is beautiful. That is just straight up beautiful right there. That is a thing of beauty. Now, of course, everywhere where you see these craters, that's her love-hate relationship with
man.
Going the whole process.
Y'all should be on the phone when I'm like, Mark, what is up with SMH?
But I mean, if you think about it, it's like it's just walking some pretty, some stairs. It tripped and fell here, but I mean, it picked itself back up and still going up some stairs, and it just climbed a mailbox peak. So give it a little bit of some slack here. So I think that, like I said, you're going to be seeing this stock going higher. There's a lot of support behind this, and on top of that, there's a lot of folks now. There was a lot of liquidity or a lot of capital or money, aka money, sitting on the sideline. And so millennials and Gen Zers, they were killing it from pretty much late March all the way up till now. And now you see a lot of the institutional ownership, or a lot of the larger investment groups, they're starting to throw their money towards it. So for once, I'm kind of happy because the little guys, they are outperforming the big guys for once, which is very, very rare. So like I said, I like SMH moving forward. There's a lot of great companies. There's been some companies that have been sleeping and now they're starting to awake. So like I said, there's a lot of support here for this ETF to go higher. And like I said,
I think I might get out and then consider some other things. So
I mean, when you look at it, just even as a month, I mean, that's growth right there.
Look at that little mound.
Oh, this?
Yeah.
I mean, that's like its way of showing you that it got over the hump. Now that it got over the hump, I mean, you're gonna see it go back to 154, 155, and don't be surprised if you see the stock trading in the next month or so at 160.
Hold on for 1 month.
It expires June 19th, so that might be a roll. We'll see.
Ooh.
All right. So let's talk about your picks for this week.
All right. So one of the companies that I'm looking at is McDonald's.
Say more.
All right. So let me go ahead and pull up that ticker for you. So as you guys have been noticing, since let's start off with the 6-month chart. So 6 months, we still have some room to run back up. We're pretty much crossing the 200. And I think that this stock is going to go beyond. Yeah, I just saw this little thing over here. And I don't really care about that. But what I'm looking at is, say, for example, we hit a double bottom here. So one here on March 16th, and then another one on March 23rd. And then since then, we just immediately spiked back up, and then the stock has just been taking off. I mean, McDonald's is not going to be as sexy as the rest of the companies out there that are the high flyers. But when it's all said and done, when people need to go get some quick food or whatever it is, I mean, of course, for, not me, I don't eat at McDonald's, but for everybody else out there, in America, especially middle America, this is going to be a place where they're going to come back to. And I mean, pretty much you're going to be seeing the stock trading back up at its highs, if not blowing past this high. So I think that you're probably going to, when it's all said and done, you're probably going to be seeing it trade at around 225. Probably within the next, I'd probably say within the next month.
225. All right.
XLY.
Huh?
How will that affect XLY?
Oh, that'll affect XLY greatly. So, for example, if you're looking at the McDonald's chart, and if you're looking at, say, for example, XLY, which is consumer discretionary, XLY has retreated beautifully thanks a la to Amazon, pretty much boosting it up, as well as Home Depot. But now that those stocks are already sitting at their 52-week highs, it's now time for those other positions to start to awake. So, for example, your Starbucks, your McDonald's, even your Booking, as the travel industry starts to make its rebound. So you're probably looking at, say, for example, August for these positions to get back to those highs. But I mean, there's some strong value there for sure.
So if someone wanted to, have McDonald's and Starbucks and all that, then you could go with XLY.
Oh, for sure. So if you don't want to pay, say, for example, and it's kind of interesting because if you're looking at McDonald's price, so if you're looking at McDonald's versus, say, for example, XLY is technically cheaper than McDonald's, and yet you still get the exposure of having McDonald's within your portfolio.
Yeah. Totally.
So there's, like I said, as these stocks run, they're going to run up the XLY position, which is good if you're an option trader, or even if you're just looking to just hold on to Steady Eddie and hold on to stocks. Either way, it's a good position. I think that over the course period of time, by the time when we look at January 2022, you'll probably be seeing XLY trading at the same price that you see pretty much McDonald's at right now.
All right, I'm doing a timestamp on this
message
right now.
I got that.
I got the screenshot. I'm going to save that for tomorrow.
Okay.
All right. So another one that I'm looking at is actually Apple.
Yes. Let's get to my guys.
All right. So of course we're seeing that Apple is like already killing it right now. And you guys are probably saying, hey, Mark, why the hell are you presenting us Apple when Apple's already up? Yes, I know you're saying that, but hear me out. Over the last week, this is the last week of Apple itself. That's just 1 week.
Yeah.
So if you guys want me to pull up exactly what that return looks like for Apple, we're looking at, by the way, Apple's up in the aftermarket. So that's a good indicator. In the last week, Apple's up 6%. That's huge. Over the last month, Apple's up 10%. Over the last 3 months, it's up 20%. Year to date, it's up 17%. So, which is telling you it's still got a leg to go. Over last year, it performed at an 80% return.
Wow.
I don't think that Apple's going to be there this year because of all the things that are taking place. Mm-hmm. A lot of trade tensions as well as COVID-19 have derailed a lot of stocks performance. Now there are some players out there that are in triple digit growth as well as double digit and high double digit, but I don't think that that's going to be Apple this year. Let me make one little caveat. I will tell you this. If Tim Cook goes up on stage and makes an announcement sometime between now and in the end of this year, and he just says these 3 words, one more thing.
Mm-hmm.
this stock is spiking. The stock is spiking. I don't know if everybody remembers, that was a key phrase that Steve Jobs used to say when he was going to unveil something that was huge. The market has been waiting for Apple to release something that is pretty much the next generation of revolutionary. And that one little thing, or that one more, it's not even a little thing, that one more thing represents a huge market opportunity, a huge addressable market, because there's a lot of people out there that pretty much, here's a hint, look like Tim Cook. That literally rely on these things in order to see the world.
Mm-hmm.
And on top of that, they're going to work, the technology will work with prescription. So, like I said, if he announces that, don't be surprised if you see this stock jump, say, for example, 3 to 4%. Just saying. You didn't hear that from me, but that's just like a gift to you, to so that way you're aware of what's coming down the pipeline. Right.
Have you talked about Nvidia recently on the show?
I have in the past.
Okay.
But if you would like me to, I can definitely still talk about Nvidia.
Where are they on your list of things to look for?
So I'm actually trading in Nvidia. I've been trading in Nvidia since I've actually had to trade in Nvidia since the beginning of this year.
Okay.
I've had to readjust my position within Nvidia this year, unfortunately. But you know, all in all, if we're looking at it over the last 6 months, here's been my relationship with Nvidia. So I had to readjust here around the time that it took a huge dive in February. So then on top of that, COVID-19 hit, but I had got it so cheaply because of the volatility fall here on my option contract that ultimately it didn't really quite phase me here. And I mean, Nvidia rebounded like it was nothing.
Okay.
And so since then, I bought a contract where it was at, I think, $3.35, and now the value of that contract is now at 22.
No way.
Yeah.
Wow.
Yes.
Sounds like my Apple stock.
Oh.
Not really.
So wait, do you guys go in, because like when you ask me about my investment strategy now, I don't do any individual stocks. It's all options for me. So do people understand the difference between that growth you said? Like, you know, like that's huge.
Yeah. So I haven't had the opportunity to tell people, but I did take them through a simple, like a simple little walkthrough. So pretty much for anybody that needs to understand the difference between an option play versus, say, for example, a stock, just as a refresher, an option trade is pretty much a 10-time return in comparison to the one-time return that a stock brings you. Now, that's great that you're going to get gains. So let me put it into perspective. So let's say that you have a position in which that goes up by, let's say, actually, that's more like a 50 times return. Because when you think about, let's say, a stock like AMD going up 10%, 10% move in an AMD position is a lot like a 300% to 400% return in the option market. Now, of course, when you're thinking about options, I mean, everybody always looks towards the good, but just as much as it is good, it can also hurt just as bad. So, for example, when you hear Jolene talk about her love-hate relationship with SMH, is because of the fact that she's trading an option on SMH, and yet SMH, when the stock dips, the option also takes a bigger dive. So, for example, the stock may be down, let's say $3. I'm probably guessing your average option trader who's just doing the very bare minimum, they're probably facing, say, for example, anywhere from a 500 to roughly $1,200 drop, $1,200 drop for the day. But on the flip side, though, I mean, $3 return for, say, for example, SMH equals the same thing, anywhere from 500 to roughly, actually, it's higher than that. It's anywhere from $1,000 to $2,400 return for the day. So It's just different. All right. Need some help, Jolene. I know I gave
Yeah, next up. Oh, actually, were you Linda wanted to know about Roku.
There it is. Actually, Roku was one of my stock picks. So congratulations, Linda. I mean, you are on it. So, I mean, she nailed it. So when we look at Roku, I see a huge opportunity for Roku. And this is great because of the fact that I think Roku was going through a period of correction. And I think that that stock has now officially been corrected. And now you see that stock on the verge of rebound, which I love it. I'm here for it. And so one of the things that I will be looking to execute, most likely going into tomorrow, I'll probably be looking to execute a trade or maybe possibly buy the stock. But I see a huge upside here from 116 to 135. And I think that if it can do this before we reach the holiday season, you could probably be seeing Roku go up even higher to about a 140, 145 price target, given in the sense that everybody loves Roku during the holiday. And on top of that, they're probably going to buy TVs that have Roku built in. So good for you.
All right, let me get that screenshot though, you know. Stay tuned, y'all, for the screenshots. They will be posted. All right. So up next you have Disney.
Oh, but of course, when you wish upon
I like that Disney, man.
Get them notes.
All right, so here's Disney for 1 month, right? Now, there's a lot of anticipation for this stock to make a huge rebound, given in the sense that we come back to some form of normalcy here. So when we look at the 6-month chart, I mean, Disney has been kind of, so you probably may be reaching I mean, in the after hours, it's up 40 cents, but I mean, it's very possible that you could possibly be seeing the stock come down a little bit more, possibly. But if not, if it rebounds, then everything's good because you can still buy and you still have quite a bit of run room, like about a $20 upside per share. So, and it's fairly cheap right now. And a lot of folks are banking on the fact that the NBA comes back July 31st.
Yeah.
ESPN happens to be one of those companies that that Disney owns. I think also the fact that as people start to go to some form of normalcy, they're going to want a summer break where they get out of the house, maybe go on vacation, and why not Disneyland or Disney World? So it makes sense. That's a lot of speculation, but when you look at the fundamentals of this company and what they do, they're completely sound. So I don't have any doubts. A lot like what I was saying about Boeing, I'm now saying about Disney.
Okay.
I like that.
Let me make sure I got those screenshots.
I like that.
Let me see. Do I got Disney?
What's their what was their 52-week high? I can't see, the screen's too small.
Wow, that's shade, but okay. I'm just
No, I mean it's small on my computer. I got a baby computer, man. My bad.
So we're at 148.
Okay.
Yeah, we're at 148 for the 52-week high of what they say on the Apple stock. Let me give you a little bit more. It's actually at 153.41 is the 52-week high for Disney. So this chart doesn't even give it justice. So you would probably have to look at the 1-year chart exactly.
Yeah. Okay.
So that's telling you there is a lot of run room for this stock.
Yeah. Okay.
And a lot of folks are thinking that pretty much if Disney's making that solid return, you could possibly be seeing this company go to a much higher, because by that time, a lot of the Disney subscription services will now start to solidify. So all those monthly service revenue of Disney Plus, Hulu Plus as well, because they own, I think they practically own Hulu. So Disney Plus, ESPN Plus, as well as Hulu. I mean, that's huge.
A while back,
bundle is, I think you paid the same price for that. It costs the same thing for a Netflix membership.
Michelle had a question. It looks like she posted the question in Ranny's watch party, so it's brief here, but it's like kind of messed up as I'm looking at it. But she said, "Is Apple more of a long-term bet?" And oh, Michelle, you're gonna have to write your question into the rewrite it again.
Yeah, I see Michelle, okay.
Yeah, you see how there it's like stacked. There's like so many things, but the one question she's had for sure was, is Apple more of a long-term bet?
Or short term?
Yeah, she's like, is this still on the update? Is it worth investing in today?
Well, yeah, if you're any of these positions in which that I put out there, they're all solid companies. So for example, if you want to have any of these things within your portfolio to carry you through over the next 5 to 10 years, I mean, these companies will be a lot larger than what they are today. Especially say, for example, given that they'll continuously find ways to innovate or to just improve their business models, which are already sound business models. You're going to see a lot of upside for them. I mean, some better than others, of course, but for the most part, if you're looking at it over a 4 to roughly 5-year strategy, you're going to love where you're at. A lot of folks don't know this, but Apple once upon a time hit $700 per share. A lot of folks don't know this, but Apple did a 7-for-1 split the moment that it hit $700 per share, thus bringing it down to $100. And now we're pretty much coming close to. I mean, it's on its way to going towards, what is it? Some ridiculous number, $350 a share. So just let that sink in for a second. If the stock had never did a 7-for-1 split, I mean, this stock would be trading pretty much at the same price that Google trades at.
Wow. Michelle also wanted you to talk about the concept of rolling a trade, and she's asking, when is it best to do so?
Solid question. You know what? I'm actually going to hand this one over to Matt because I recently
Yes.
had a role,
Wow.
a position. So unless you want me to still take the baton, you know.
No, you know what? Here, no, I'll give it a shot. You can fill in where I make the gaps. So,
Right, I got
to my sister Michelle, how you doing? Basically, I have stayed with XLK, so that's been my stock that I've been trading. So, technology ETF. I like having hands in all the different technologies, especially the top performing ones. No need to be in individual ones. I can just have my steady Eddie in XLK. Well, I had an XLK position that expired $110 January of 2021. So I hit my goal percentage. My goal percentage is 100%. Is when I start thinking about either shaving. Mark just taught me the rollover principle, but it's when I start thinking about it, because I now know that if I were to, let's say, drag my feet and it gets to 80%, I'm still fine with 80% profit. But 100% is where I start to think about what I need to do as my hurdle. And so instead of selling out of it and having to rebuy it at a higher price, I just rolled it, meaning I purchased the January 2022 option. So it became available, bought that at another higher strike price that I calculated based off of what I believed it was going to grow to, with pullback and all the market stuff I thought might happen, which is what I did with the original one. So I just basically rolled that price to the next one, and it allowed me to get now a cheaper price with all the proceeds that I had. So I took 35 contracts that I bought originally with my $7,000, and now I was able to get 99 contracts, but investing ain't one. So that's what we ended up doing with it. You know what I'm saying?
Yo, drop one of those.
So wait, so to Michelle. So the basis of the roll is that you can use the cash instead of selling out of a position. You can use the cash that you've made as the equity and buy more contracts of what you already like. So selling it, paying the fee to sell my stocks and the rebuy would have been 2 trade costs. I could just make 1 trade, save the fee, which eats at your principal and your returns, and then triple my contracts basically. So that's the idea of a rollover, and I think it works well if you like the stock that you already have, just want to get a longer position. because with what Jolene and I were talking about earlier, I can't stand the fluctuations with my money. I work too hard for it. And until I can sit in front of a computer and really trade like a professional would trade and be aware of the ups and downs and all that, I have to do leverage trades over a year long and just continue to stay with stocks that I trust and know that they're going to perform over the long period.
And the coolest part about rolling is that you can stay within those positions, and then whatever else is not used in those positions turns into cash that you have on the sideline.
Yes.
So that's the beautiful part. It's like a double whammy where you don't have to pay the extra commission costs. You can also extend the timeline of your position by finding, say, for example, another price or another target at the same price that you originally bought it at, or whatever you may have. And then once you do that position, if you made a sizable amount of profit, that profit now goes to the sideline while you still have a new position out there in play, which therein you can either turn into leverage to do another trade or to do something else, or to let it sit there as cash. Yeah. That's the beauty of rolling a position.
I do want to shout out Ranny, because one of Ranny's top picks on the first, after she did her homework for picking her 5 stocks, one of them was Disney. And that was one of hers. So she was like, didn't I say something about you started this year? Ranny, we're giving you your
flowers. Give me my flowers now, man. Don't wait till later.
I am super proud of Ranny. I mean, I remember there was one of the episodes she was like, I just got to get in. And the next thing you know, I found out, oh, she got in. And then next thing you know, it's like she just picked positions and then she was off to the races. So congratulations. Shout outs to you, Ranny. You did your thing.
And she's looking to trade her Facebook stocks.
Oh, wait, you haven't traded that yet? Oh, man. Okay. definitely do that. But I mean, shout outs to you, because you probably waited, and I'm probably sure you made a good decision, because Facebook went up, I think, today. I think by, what was it, 3% or something like that. So
it had a good day.
I had a good day today. All right. So I guess kind of the things that I wanted to kind of reiterate for folks. Oh, no, before I move on, I'd be remiss. For those of everybody that are like, kind of like, well, there is a company. Can I talk about it now? I mean, I just want to make sure I get it out there.
Yeah, go for it. We have 5 minutes. Go for it.
Okay, so we've been looking for areas, and we're always looking for organized businesses that are on the come up. I mean, that's literally who we are. And so one of the things that we found, a company that's definitely represents for the culture, is a company called Dough. Now, for those of you guys that know about Robinhood, I hate Robinhood. And the reason I hate Robinhood is because of the fact that, one, it's not as reliable, and on top of that, it doesn't really give you any fundamental knowledge. It just allows you to trade, and then on top of that, read news. Well, here's where Dough changes the game, because they allow you to do those things, and they're reliable, and on top of that, they are actually giving you fundamental data for every single position that you look up. So I love that. And on top of that, there's zero commission and all this other stuff. So that's pretty cool. I know the founder, one of the founders of that company, a brother who is the CEO of the company. He used to work for TD Ameritrade. Anybody who saw those TD Ameritrade commercials where you saw the black guy explain trading, I think it was options trading, that's the same guy who left TD Ameritrade and started the company Dough. And that's spelled D-O-U-G-H, just like, kneading dough for all those bakers out there. So it's a fantastic company. They're on the up and up. They definitely want to know what I think as it pertains to features. If I have the opportunity, I may invest in a round of funding if the opportunity presents itself. That is how much I believe in it. I also started an account in that position. I started off with a simple $1,000 just so that way people can understand where I put my money, where my mouth is. For one of the very few times I'm getting ready to open up and show people what one of my burner accounts looks like.
The burners.
So pretty much I started off with $1,000 in this position, and I did an AMD trade because of the fact that, I mean, come on, it's AMD. So as of today, I am up. I don't know if everybody can see that. I'm up 163% in just a short period of time, and I did this trade on Monday. So yeah, and I didn't pay any commission.
Something with $1,000 is what you're saying.
Yeah, wait, no, but now that it's 100%. You put in 5, would have been 10.
So
I
actually made a $1,364 return off of it, from 1,000 to now I'm at boy swimming over here.
Yeah. So yeah, that's all I gotta say. I set up my account, and that's gonna be where my extra investment income will be going over there.
And we're working on trying to get I'm working with the team to see if they can set it up where people can open up IRA accounts and trade out of IRAs.
Yeah.
So that way everybody doesn't have to worry about the capital gains tax and the income tax later on. I mean, if you just do that, then you literally just change the game for everybody. And so Victor, he and I are talking about that, and we're trying to see if we can potentially, work it out where it works out for everybody. I'm not a part of this company. I'm not endorsed by them, but it's just something, if I see something and if I see it's a good opportunity, and if it's an opportunity for the culture, I'm definitely going to put it into everybody's peer view, especially for all you Robinhood folks out there that hate your preliminary crashes every now and then. But if you're looking for something different, then there's an opportunity for you. If you guys want me to, I'll put the link in the come ups page, so that way you can go check it out for yourself.
Matt, that's where I'm gonna put my burner account.
Wait, look,
No,
I'm already looking up Victor right now. I'm looking at Victor right now.
Yeah, check this out. So that way everybody understands what I mean by burner accounts. So a lot of times I'll hear people talk about like, oh, well, I can't get into investing because of blank, 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 blank. They give me X amount of reasons. So what I will do is I'll typically ask them how much, would you need to get started, or how much do you have to get started? And they'll tell me how much they have to get started. So what I will do is I'll just go ahead and create a burner account and literally just invest, and then show them that, hey, if you had did this, then you would have made this. I think I was talking to somebody, and I think he had about maybe like 4 or 6 grand to start, and for some reason he didn't make the choice. I'm not gonna put him out there on blast and anything else, but had he did the decision, he would have been up from 6,000. He would have been sitting close to 73,000 had he made the trade. But
Wow.
So that's the reason why I create burner accounts, just to show people an example that, hey, if you do this, if you really take the initiative, then you can do that too.
And I know how much time you have, Jolene, before you close, but that's what I appreciate, is that doing this has allowed me to see how easy it is to trade from my cell phone, computer. Like the myth of you can't trade unless you go into an office, sit with somebody, give them the money, have them do it for you, has been debunked. And it's really simple.
Yeah. And the beautiful thing is that just within a month, I typically find that people typically outperform. If you pretty much like literally put the energy in. I think I just spoke to a client today that I advise and mentor. I pretty much told them like, hey, based upon what you did, you literally just beat 10 years worth of staying at a financial advisor or financial planner or whomever else that would manage your money. You literally just beat them out by 10 years just within the month or month and a half that we've worked together. So perspective.
Wow. So in our last moments, I'm making you host right now. In our last moments, do you want to just say the other stocks and then have people do some homework?
Yeah, sure. What are they? Just so that way I can just give it a quick pitch.
Lamb Research.
Lamb Research, I mean, they're one of the companies that's on a rebound. They've been corrected, and now they're pretty much looking for a nice little rebound coming towards the second half of this year. Be on the lookout for Lamb, and I think that's LAM.
It is. And then you said it was a toss-up between Micron and Qualcomm.
Yes, I'm trying not to double dip from the week before, but it's so hard, man. But you know what? In the interest of fairness, if you want to stick with Qualcomm, by all means, go for it, because of the fact that 5G is just going to be a whole nother game. But if you like, say, for example, some of those returns to come back to you a little bit faster, then Micron will probably be one of those companies, and I like it. It's a great performing company and great performing stock. So definitely do your research there. But you can't go wrong with neither one of those. So.
All right, and then one of Matt's favorites here, DraftKings.
Uh-oh.
So So I did a trade earlier today in DraftKings for a $39.50 call. My price target for this stock is going to probably go to 42, thanks to sports returning and possibly getting up to a high of 45 until, I mean, it pretty much settles back. So for any of you options traders out there, I'm looking at the July 24 calls. But if you're not, if you're looking at buying the stock, technically I would not advise you to buy the stock of DraftKings. It's just not worth it just yet.
Okay. And then last but not least, Best Buy.
Oh, yes.
Yeah.
Best Buy is definitely coming for a comeback. Thank you, Jolene. I love it. So Best Buy is definitely one of those companies that you definitely want to have on your radar. I'm definitely going to be looking to make a buy tomorrow in Best Buy. I think the stock was trading around like 100 and some change before, pre-COVID-19, but they were doing phenomenal for their curbside pickup throughout COVID-19. Brilliant company that survived kind of like the Amazon revolution, and they're doing some pretty phenomenal things. And I think that there's just nothing but upside for this company and moving forward. I'm definitely looking forward to its earnings as well as going into the end of the year. So if you're looking for a stock to hold for from now to the end of the year, Best Buy would definitely be one of those companies.
All right, you heard it here first, folks. We'll have today's charts posted so that you can track and see how much the stock picks are progressing. And with that, that is all we have for Trade Talk Tuesday. Get your money ready, get your money up really for tomorrow, because there were some gems in there. So we want to thank Matt for joining us.
Man, appreciate the invite, y'all. Appreciate the invite, man.
It was great to get your perspective. Appreciate
we'll have another guest on next Tuesday. So hopefully, Matt, don't be a stranger. Come back at any time. We would love to have you on board.
Look, man, I'm trying to come back when I'm making this money.
Don't worry, you're making the money. We got you. All right, guys.
All right, y'all.
Bye.
I'll
Peace.